Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Felipe Luna of Omniscient. Felipe, thank you for joining us.
I'm glad to be here, Hall. Thank you for having me.
Great. So what was your background before starting with Omniscient?
Well, I guess not the typical career track. My career actually began in the U.S. Navy back in the late 80s. I'm a Naval Academy graduate and started in the retail financial services industry with Merrill Lynch here in Silicon Valley. And over the course of time, I had the opportunity to move into some higher roles of responsibility with Smith Barney and Citigroup and UBS, building out some interesting businesses involving technology and integration in corporate services. And then the mid-2000s, my wife and I decided to start our own financial firm, an investment advisor, began the process of assessing technology needs for our new young firm and realized that there were no really good technology options available for us that made our lives easy, that streamlined information, that integrated data. So we decided we would set off to build our own platform and built our firm on the back of that platform so that by around 2012, we built our firm to a little over $2 billion in client assets. And at that point decided that the technology direction was more exciting than having an investment advisor firm. So in 2016, we split Omniscient off and launched version 3, and now we're in the process of launching version 4.
So you're in what we call the wealth tech sector. Can you describe that in more detail about how that's the same but different from fintech?
Sure. So fintech is a broad category that encompasses technology that manages, measures, or processes financial data. It can cover aspects like credit cards and payments, money movement, think Venmo and companies like that. Wealth tech is a subset of fintech, so it's a smaller population of technology solutions that's a little bit more narrowly focused on financial advisors and how they work with their end clients as opposed to directly focusing their solutions on the end consumer. So it falls in a couple different buckets: business automation, portfolio accounting, data analytics, financial planning, and a few smaller sections. But fintech is about 30 to 35% of the, wealth tech is about 30 to 35% of the fintech market right now.
Wow, that's a bigger chunk than I thought it was going to be. But so what's your advice for people that are joining the wealth tech sector? What do you tell them today where it's at?
Well, I think right now it's a little bit like the gold rush. So it's still as fragmented a space as it was years ago when we first took a look at the industry. There are many, many small players, and very few of them, I think, focus on integrating information from one application to another. So I think one of the things that's important to focus on is to find points of differentiation in kind of a crowded market. Similarities don't sell, differences sell. I don't think it's necessary to have huge differences between your solution and the competition, but they have to be clear and easy for the consumer to understand. And maybe more importantly, have to be tied to some major goal or pain point that is clear and identifiable in this wealth management market.
Can you tell us more about the wealth tech sector? You said it was a good size of the fintech portion, but what is the total market size there today?
Yeah, so in terms of target market, if we called it a fintech, right now fintech is about a $4.5 billion revenue market. And, wealth tech, again, is about 35% of that. The markets themselves are growing at about a 22% compounded growth rate. They expect to continue to grow at that rate for the next 5 years. So we'll see significant lift in this particular space, largely driven by regulatory pressure on wealth management firms to secure client information, to do more for their clients, and to keep up with the competition. And then we're seeing a little bit of pressure being put on traditional financial firms by automated advisors or the robo-advisors who are beginning to grow quite aggressively in offering automated advice, automated investment management solutions at low prices, bringing quite a bit of pressure to those traditional wealth managers.
So who are the current players in this space that we should be watching?
That's a good question. So in the business process automation space, we have some very large companies like Salesforce and Envestnet, Black Diamond. So these are our large multi-million, in some cases multi-billion-dollar firm. Right now, I would say there are no less than 50 players in wealth tech. They're covering 5 to 6 areas of focus like CRM, documents, portfolio accounting, regulatory, and business automation. And those are firms like Redtail, which is a CRM competitor, Orion, which does portfolio accounting, DocuSign or Laserfish, which does document management. And then in the regulatory space, you have RIA in a Box and a few other players that are playing around in that regulatory automation space.
Based on those different subsectors, where are the investment opportunities? Where do you think is going to see the most funding go in place, and where do you think the best returns will come?
Great question. So I think right now the larger volumes of investment dollars are going into the automated advice, larger firms, robo-advisors, and that type of technology is attracting significant investment. We're starting to see quite a bit of volume coming into business process automation and analytics. In large part, we're seeing a wholehearted embracing of analytics and automation across the entire industry, almost in every segment, whether they're money managers, mutual fund companies, investment advisors, or broker-dealers. I think that they're realizing that they have to get their arms around the state of affairs in their firms from a business opportunity standpoint, but also from a risk mitigation standpoint. So I think that this analytics and business process automation is going to be the leader over the next 3 to 5 years. And right now, emerging probably as a strong second would be big data, wealth management, and the financial services industries in general are very data intensive businesses. Almost all the business information in which we traffic is already held in electronic format. So you can picture all the data in and around financial markets constantly flowing, and then the activity of each individual consumer, their buys and sells and holdings, and all the data of the accounts and the custodians where they may be doing business like banking and borrowing, all that data being warehoused and analyzed and organized for the consumer's benefit, I think is a very, very hot topic right now. So data aggregation and big data firms, I think, are also going to be really good areas for growth in the next 3 to 5 years.
So do you see the wealth tech platforms turning into basically big data analytic machines where they make more money off of the data and the analytics than they actually do off the core service?
I can see a day where we see these big data repositories fully embracing, what I'd call a Google model, where you're giving away services and views of data in exchange for the option to analyze anonymously reams and reams of data. So I do believe that, and it's one of the areas of focus for us, is to give our users in aggregate the benefit of the analysis that we can perform over the entire database that we warehouse for all of our collective clients. So that will give some real powerful insights and allow smaller firms who don't have access to that kind of analysis to really benefit and do better things for their clients, better things for their firms by benefiting, from the collective data.
So where do you see the challenges in the wealth tech sector coming from?
Yeah, I think right now the two biggest challenges are going to be legacy and security. Legacy software and legacy databases comprise about 35 to 40% of the market. It could be a combination of early adopters or folks who have engineered their own technology solutions, and getting those users to migrate to maybe a newer, more efficient, more effective technology environment requires organizational pain. And so that is a challenge because these firms are not, they're running suboptimal businesses, don't have a clear view over what's going on in their business, and struggle with scale and struggle with controlling costs. So I think that's an issue. The good news is that right now in the retail financial advisor space, and by that I mean the 230,000 independent financial advisors who are one-person shops or more, there's only about a 35% utilization of basic business process automation software like just CRM. So in those cases, legacy software won't be an issue, and it'll be more easy to build up a user base there. Security is an issue that anybody who has any business that's internet facing is going to have to struggle with. Cybersecurity and the state of hacking in general definitely pose a challenge in keeping customer data secure, both from hackers, but also from users' poor security habits. It's a blessing and a curse. Security is driving folks to utilize web-based services like Omniscient to get their customer data off of their premises, out of their offices, and off of their locally housed servers and workstations and up into a secure cloud. So that's a good tendency that we see in the marketplace. Unfortunately, it's very inconvenient to maintain good security hygiene. Changing passwords and different modes of authentication are by their very nature inconvenient in order to be secure, and we see significant risk there in users having their local devices hacked because of their poor cyber hygiene.
Seems like that's going to be a challenge for all internet devices, as you said. Coming up is the cyber issue and the risk that comes with it. But shifting gears for a little bit, where does Omniscient fit into this space?
Yeah, that's a good question. So if we take a step back and take a look at the wealth management industry as a whole, there are over 500,000 participants in the space. The average age is low 60s. We see consolidation affecting this space for a couple key reasons. One is simply demographics. As these advisors get older, they're going to have to exit the business, and we don't see the replacement ratio keeping up with the number of advisors exiting the business. Regulation is stressing all competitors in the wealth management business, from the largest to the very smallest. And that is a constant grind of the business. But over time, we see some firms simply exit the business due to regulatory pressures that are constantly changing and evolving and becoming more stringent. And then I think the last is going to be competition. We have the large national firms, we have robo-advisors, we have technologically advanced competitors in the wealth management business. And so competition is also creating a pressure on these independent firms that we traffic with. And so for those three reasons, we see some consolidation in the space. And I think where Omniscient helps is, Omniscient basically integrates the 5 major components of a technology stack that every single financial services firm needs. And so in just doing that, Omniscient allows our customers to simplify amount and complexity of their technology stack down to a single solution. Also, in doing so, we also pull all the financial firm's data into a single database. And what that gives is it really gives a unique ability to analyze that data that doesn't exist if a financial firm's data is spread across 3, 4, 5, 6, 7 different solutions. So being able to analyze and derive business insights from working from a single business database is unique right now in the industry. And so I think for those reasons, I think we'll be at the forefront of the consolidation wave that we'll see, helping firms that are larger who are looking to participate in the consolidation trends by acquiring or merging smaller firms into their firm, and larger firms who already have scale but are continuing to grow and see their sales force expand into multiple locations, adds complexity, and Omniscient's ability to unify all that information in a single place allows them to run and measure and manage their business and mitigate risk better than any solution out there. So I think in terms of helping the business cope with consolidation, I think we're very well poised there. The last segment where I think we'll have some good opportunities is in the data and analytics space. Larger players, mutual funds, hedge funds, money managers who have an interest in learning what is going on in the advisor space will be able to derive some very fascinating insights from the data that we collect from all our advisors and all their end consumers that can be analyzed anonymously and give the larger firms who want to sell into this wealth management space some insight that they couldn't get elsewhere.
Well, that's a great overview of the product and the space that is called wealth tech. In the last few minutes that we have here today, what else should we cover that we haven't?
Yeah, I think we've seen technology affect other industries, the taxi industry, and now we're starting to see fintech begin to have some effect in the finance industry, primarily right now in the payment space with Square and Venmo and Plaid and other players that are aggressively competing in the payments space. The wealth management space, and by wealth management, I mean financial advisors that work with end consumers to manage investments and do financial planning. Most large and wealthy clients work with financial advisors. So most of the largest pools of wealth in the country are managed through an advisory relationship of some sort. And so what affects this business, whether it's consolidation or regulation or technology, is going to affect the largest portion of wealth in the country. And so I think that for a long time, it's been a sleepy industry with regard to technology. But now I expect that in the next 3 to 5 years, we're going to see an incredible transformation of the industry that's going to be driven by automation, new ways of communication, all using technology. And I think that the wealth management space is really going to be reinvigorated, and it's going to change significantly for the better. It'll serve its customers better. I think all of that will be driven by utilization of technology. And at the end of the day, that's really our goal, to help these financial advisors drive a better client experience down to their end customers.
Well, that's great. Well, how best for listeners to get back in touch with you?
LinkedIn is great. Our public website is www.omniscientcrm.com. And I'm happy to respond if anybody has any questions or any additional thoughts.
Well, great. We'll put those in the show notes and hope to have you back for an update soon. Appreciate your taking time to talk today.
My pleasure. Thank you very much.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.